what happens to an asset that is in a secular uptrend, driven by liquidity, that also has a lot of investor and speculative interest with this adoption curve, is every 4 years, everything goes a little bit bananas. This is why we're waiting for this price action to happen, is the debasement currency is a real thing. This is the best asset we've ever been given. It protects us from this. Liquidity is the driver. We're just about the point where liquidity is starting to really increase. We're seeing the Chinese really lead it, but we're seeing global M2 rising around the world. So yeah, it's right here, right now.
According to Raoul Pal, liquidity is the key driver behind the performance of both traditional and digital markets. Whether it's the Nasdaq, Bitcoin, or the broader crypto ecosystem, liquidity determines price movements. Pal explains that liquidity increases when governments refinance debt, lower interest rates, or inject money into the system. Crypto, however, is unique. It benefits from both liquidity-driven price increases and its status as a disruptive technology with unprecedented adoption rates. Pal introduces the concept of the banana zone to describe the phase where liquidity-driven growth accelerates exponentially. During these periods, speculative behavior increases and prices can appear to go bananas. In a linear chart, prices seem to rise at a staggering pace, while on a logarithmic chart, the moves appear more measured, an important distinction for investors navigating volatility.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
97.5% of the movement of the Nasdaq, and explains 87% of the movement of Bitcoin and of all of crypto. It's all based on liquidity. Liquidity is the driver. Now, what we've got, why crypto outperforms, let's say, the S&P 500, which is also driven by liquidity. The S&P 500 basically just moves by the debasement rate, which is 8%, which is the hurdle rate you need to earn on your assets before you're even making, your future self is going to get wealthier. If not, you're not making money. And then we've got inflation at 2 or 3%. And what you're doing here is crypto is also a secular trend. It's the fastest adoption of any technology the world has ever seen. It's the highest performing asset class of all time in the shortest period of time. Bitcoin's average return is 148% a year. That includes 3 80% drawdowns. So that we've got a secular trend and debasement of currency happening at the same time. Liquidity is driving it. So where are we now in the liquidity cycle? So what's interesting is liquidity is driven by the refinancing of government debts. The government debts are every 4 years. They reset them back in 2008. And we are at the point, and this is what the kind of macro summer and macro fall that I talk about, crypto summer, crypto fall, is the point that these debts need to get refinanced. In the US, we've got $10 trillion of debt needs to be refinanced. Now, interest rates are here. Trend rate of GDP growth that generates the income to pay the interest is here. They're going to have to bring down interest rates. And they're going to have to inject liquidity to finance all of these debts. And that usually means issuing more debt. So that process is the process of liquidity. We're right in the teeth of it now. This is where it starts. So we've seen, and it's not just the US, it's China, it's Japan, it's Europe, it's the UK, it's Canada, it's everybody. And they all do it at the same time. And the Chinese have gone first. The US have cut rates, everybody else has cut rates. So that liquidity phase, using forward-looking indicators, and I use financial conditions, which lead it by about 5 months, just say it's up only from here. And this is why we're waiting for this price action to happen, is the debasement currency is a real thing. This is the best asset we've ever been given. It protects us from this. Liquidity is the driver. We're just about the point where liquidity is starting to really increase. We're seeing the Chinese really lead it, but we're seeing global M2 rising around the world. So yeah, it's right here, right now, and it's the most important thing. you probably don't know about macroeconomics that you need to know about. What happens to an asset that is in a secular uptrend, driven by liquidity, that also has a lot of investor and speculative interest with this adoption curve, is every 4 years, everything goes a little bit bananas. So on a linear chart, it does this, and then it does this. On a logarithmic chart, it's all normal because it's exponentials. And this is the point. You've got to roll 10 trillion of debt. What you do is you debase your currency by liquidity. And what happens is prices start to rise. Prices start to rise, creates a reflexivity in this space. And what happens is prices rise even more. So the banana zone is something that almost everybody's waiting for. And I've been speaking to a whole bunch of people recently. I was with one of the world's most famous hedge fund managers today. He's like, when's the fucking banana zone? And it's like, you speak to, I'm on the board of SUI, which is one of the big new blockchains. They're like, at the board meeting, where's the bloody banana zone? Yeah, everyone's waiting for the banana zone because it's just it's a current function of what's happening in the macroeconomy. It's a feature of the market, and it's a great meme that kind of sums up what it's all about. And it looks like a banana because it does that, and it goes bananas.
What did you say in those meetings?
I said, in Cayman, we have an expression which is soon come, which is like, yeah, any day now. It's like, from the macro work that I do, and I probably produced, I don't know, maybe 100 charts on this last month, it's right here and now. We're already seeing the signs of all of the liquidity coming, all of the leads of this stuff. For some reason, the market seems a bit choppier than it should do. And the other thing, weird thing, why the banana zone is so important is, like, everybody's hopes and dreams are in the banana zone.
Pal concludes with a bold prediction. The crypto market could reach $100 trillion by 2032-2034. If achieved, this would represent the fastest wealth creation in history, dwarfing the current value of the U.S. stock market, which stands at around $50 trillion. Pal stresses that this massive growth potential is rooted in the combination of liquidity cycles, technological adoption, and investor incentives. He explains that blockchain networks are laying the foundation for a new financial system, one where users not only interact with the infrastructure, but also benefit from its growth. This is why Pal believes that crypto's adoption curve will continue to outpace all previous technologies, solidifying it as the most transformative asset class of the 21st century.
One of the key drivers is this is now a $2 trillion market. And if we extrapolate these trends, it's going to $100 trillion by about 2032, 2034. 2 trillion to 100 trillion is the most amount of wealth the world has ever generated in a 100-year period, sort of 50-year period. The entire value of the US stock market is $50 trillion. It's twice the accumulated value of everything that the United States has produced in terms of public companies. Right, that's the scale of what is happening here. And why is it happening? Well, it's just a different layer to the internet. Firstly, the one layer, we talk about debasement of currency, also in financial inclusion and all the stuff that Bitcoin brought about, and stablecoins. Really important, we've been given a globally homogeneous product, the only one that really exists that is available to everybody instantaneously. People will say gold, but gold, if you go to a village in India, the bid-offer spread from buying it from a gold merchant, it's not a currency, it may be a store of value, but it's not great. Everywhere in the world, with anybody who's got a mobile phone, which is 7 billion people, I think now, 6 billion people have a mobile phone, can now buy this asset. Right? You can't buy Tesla shares, you can't buy dollars, you can't buy any of these things. Okay, so that's amazing. And this asset is fractionizable. So anyone can put 10% of their wages in. Everyone's on the equal playing field. That never happens. You can't afford most things, but here you can have something that other people can afford. So that has driven a lot of interest from people, particularly if you're in a foreign country where they treat their currency badly. Okay, this is nice. The other thing we've seen is there is really only one currency in the world. It's the US dollar. Nothing else matters. But nobody can get access to dollars. If you're living in the Philippines, you can't go to your bank and get dollars. Now you have the magic of stablecoins. This is the fractionalized, mythical eurodollar market, the largest market the world has ever seen. Now everybody gets access to dollars. Everybody gets access to an asset that grows. And why does it grow? It's driven by something you'll understand in technology, Metcalfe's law. Metcalfe's law is the value of a network. And this is a network that's built on the internet, which is the network that blockchain creates. The more activity and the more users, the more valuable it becomes, the more the token price goes up. So the more token price goes up, the more the money that is involved in the system. So what are people building? So they're building a new financial system. They're building the next layer to the internet. We have problems in a digital world. In a digital world, everything you make goes to zero in value over time because you can make infinite amounts of it. It's just a matter of cost and Moore's law. And so we've seen it with everything from cloud compute to email to you name it. Everything goes to zero. So that's a problem. If we're living a more digital world, how the hell do we have value in a digital world? You know, people know that their kids use Roblox and there's money, but that money goes to zero. And then suddenly the smart contract arrives. Smart contract is a way of using blockchain and then attaching scarcity because it's a contract. 150% a year returns from an asset class since 2011 with 3 80% plus drawdowns included. When I move out the risk curve to Ethereum, it's about 170-something% a year. When I get to Solana, which is earlier in its adoption curve, it's 280% returns a year. This makes a mockery of any other investing. And so what happens is people end up becoming more and more invested in this space. And so the banana matters to them a lot. But that function of the token price going up drives a lot more activity, which is venture capital activity and other investment activities. People recycle profits. And so what you've got is this perfect behavioral incentive loop that drives this ecosystem, which is why this ecosystem is so much faster. Because in the internet, we couldn't own a part of it. Here you're owning a part of the infrastructure layer. And that's an amazing, empowering thing. And everybody in the world can own it. Imagine if everybody could have owned a share of the internet. That's what we're dealing with here. This is why it's Web 3. Yeah. Because it's the next iteration.
Raoul Pal's insights provide a compelling roadmap for understanding the intersection of macroeconomics and crypto markets. His analysis of liquidity cycles, currency debasement, and the role of blockchain technology offers investors a clear perspective on why crypto is poised for extraordinary growth. As the world embarks on a new liquidity phase, with governments rolling over trillions in debt, Pal warns that we are on the brink of what he calls the banana zone, a period of explosive price action. For those looking to navigate the complexities of the macro landscape, crypto offers not just protection, but also unparalleled opportunity. With global adoption accelerating and new financial systems being built on blockchain, the future of crypto looks brighter than ever. The question isn't if we'll enter the banana zone, it's when.
Please like and subscribe my channel.